What's going on, team? It's Caddy with Money Vesting. I hope that you all are having an amazing day. So in this video, we're going to talk about two stocks that we need to watch out for next week that are going to be reporting their earnings. And if we can get over 300 likes on this video, I will be putting out another video tomorrow where we will talk about 3 more stocks that we need to watch next week. So I know we can do that. We've already hit that goal once, so let's make it happen. 300 likes, and I will put out another video tomorrow going over 3 more stocks. So the first stock that we're talking about today is arguably the biggest household name in the world, and that is Aapl, ticker symbol AAPL. So Aapl reports their third fiscal quarter 2020 earnings next week on Thursday, July 30th, which most certainly could potentially move the markets with their massive market cap of $1.6 trillion. Now, Aapl also operates on a different fiscal year and not the calendar year. Their fiscal year starts October 1st and runs through September 30th, which is why they are going to be reporting their third quarter earnings and not the second quarter earnings where most companies are reporting. So there's a million things that we can discuss about Aapl, but let's start with their financial summary. So the company sits on massive revenues of over $200 billion year over year and has been growing at an average rate of 6.7% in the last 4 years, which in my opinion is really good for a company this size. It's stable, it's mature, and it's still growing. Now that being said, the gross profit margins sit at 37.82% as of 2019, while averaging at around 38%. Their operating income has been growing at an average rate of 2.65%, and Aapl is without a doubt super profitable with net income at over $55 billion as of 2019, and it's been growing at a rate of over 7% year over year. With an average net income margin of about 21.48%, that essentially means for every $1 in revenue Aapl generates, close to 22 cents trickles down to the bottom line as net income. The company also doesn't care about the analysts' expectations or their estimates and has been consistently beating those estimates both in terms of earnings per share, the EPS, and also in terms of the revenue. Now for the second calendar quarter and the third fiscal quarter for Aapl, in the last earnings call, Aapl did not provide any guidance for their Q3. So this is the first time that's actually happened in the last 2 decades. So in the last 20 years, this is the first time Aapl did not provide any guidance for us for the third fiscal quarter, primarily due to the uncertainty and the global pandemic that we have going on moving forward. But that being said, there are analysts that are following Aapl's sales that are estimating the EPS of close to $2.21 and a $51.8 billion revenue for Aapl in the third fiscal quarter 2020. So I would not be surprised if Aapl comes out and beats these estimates and analyst expectations yet again. But that being said, Aapl's third fiscal quarter is also seen as their weakest fiscal quarter and the weakest time of the year. As you guys can see this chart right here going back as far as 2017 for both the revenue and the net income and how it drops in Q3. So now talking about Aapl's revenue, it can primarily be broken down into 2 parts. The first one is the product revenue and the second one is their service revenue. Now products are like their iPhone, their iPad, their MacBooks, all the hardware that we use. Now that's variable in my opinion and can really fluctuate, and it's very difficult to predict what it's going to be every quarter and every year because it's very seasonal, and they also launched their new iPhone during September. The other revenue driver is going to be the services and all software, iTunes, Apple Music, iCloud, Apple Care, and all the other services that they provide, which is a little bit more predictable to some extent because it's recurring revenue that's coming in every month as more and more people join the Apple ecosystem. So now looking at their revenue breakdown going back 3 years, you can see that their iPhone remains their biggest revenue driver, with iPhone sales accounting for close to 50% of Apple's annual revenue, and that their service revenue accounts for just about 17.7%, which isn't bad, but it's still less than what their hardwares bring to the table in terms of sales. Now looking at geographically, the Americas remain their strongest area with almost 45% of the sales coming in from the US and Canada, and Europe is their second biggest market with over $60 billion in sales in 2019, and then China and Japan combined accounting for over $61 billion in revenues in 2019. Now, the reason why a lot of analysts and investors focus on Apple's service revenue is because of this right here. So you can see the difference between the gross margins of how Apple, even though generates most of their revenues from products and hardware, their biggest profit driver is in fact services, with their gross margins at over 63% in 2019, over 60% in 2018, and over 55% in 2017, versus their product gross margins, which sit at just over 32%. So now we're going to jump over to the second quarter results for Apple that they announced last March, and we'll go over exactly what the cash and the debt value sits at, and we'll go over the revenue, the product sales, and all the other things that we need to consider when we find out how Apple did in the third fiscal quarter next Thursday. Alright, you guys, so here we are inside Apple's newsroom, and you can find this on their website under Investor Relations. So the first thing I want to go over is that total revenues grow and service revenue reaches an all-time high of 13.3 billion. Again, one of the key things for revenue drivers for Apple is going to be looking at the service revenue, because that's where the profit for the company is. With their service margins being incredibly high, they're able to generate more in net income, and if they're able to increase their recurring revenue with services and the Apple ecosystem, eventually that will make the company more profitable over time, even if they don't make as many sales for their iPhones and their other products and hardware. So Apple today announced fiscal results for its 2020 second quarter ended March 28th, and the company posted quarterly revenue of $58.3 billion, an increase of 1% from the year ago quarter, and quarterly earnings of diluted EPS of $2.55 per share, which is up 4%. Another thing I want to point out is what their CFO said. They essentially said that we are proud of our Apple teams around the world and how resilient our business and financial performance has been during these challenging times. We also generated operating cash flow of close to $13.3 billion during the quarter, up $2.2 billion from over a year ago. So now we're going to jump over to their financial statements for the first 6 months and kind of look into where the revenue, the net income, the cash, and the debt value sits. Alright guys, so here we are inside Apple's consolidated financial statements, and this right here is going to be the 3 months ending, and this right here is going to be the 6 months ending. So in the first 6 months of their fiscal year 2019 going into 2020, Apple's total sales sit at $150 billion, which is much higher from their $142 billion same time last year. If you were to kind of scroll down, you'll notice that their cost of sales and their net sales are both broken down into the two revenue breakdowns I mentioned, products and services. And you'll notice that the service revenue is, even though it's very less at $13.48 billion for the second quarter 2020, their margins are significantly higher, right? So their cost of sales for services sits at just $4.6 billion. Now, $4.6 billion off of a $13.3 billion revenue is close to about 30%, right? So their cost for this service segment is only 30%, as opposed to their cost for products, which is going to be at $31.3 billion versus close to $45 billion in revenue, which accounts more towards 65 to 75% of their cost of sales. So that essentially represents a much higher profit margin for their service segment as opposed to their product segment. So if you were to kind of scroll down and read further into kind of like their report, you'll see that Americas again continues to dominate at $25 billion coming in from the Americas, and for the first 6 months, over $66 billion coming in from the Americas. Europe is going to be the second one at $37.5 billion, Greater China at $23 billion, Japan 11.4, and rest of the world is again going to be 11.2, right around that level. So if you were to kind of scroll down, you can see that again, the iPhones are dominating their sales with over $84.9 billion coming in from their iPhone sales, and then everything else is going to be kind of lagging behind their flagship product. Services accounting for $26.63 billion in the first 6 months. Again, quite significant, and this is something that we need to grow as we move forward. And the $13.3 billion is the new all-time high, the quarterly high for Apple's service revenue. So if you were to kind of scroll down and look at their cash versus debt, so you can see cash and cash equivalents, the company right now is sitting at over $40 billion as of the first quarter. That's just the first quarter. That's not the total cash value. The total current assets are going to be $143 billion versus their total liabilities. If you were to kind of scroll down, you'll see that the total liabilities sit at $240 $41 billion, and their total assets are at $320.4 billion. So that's a strong balance sheet, more assets than liabilities, and that's what we like to see. If you were to kind of scroll down, you can see the term debt for the company sits at just over $89 billion, but their total debt, or their total long-term debt, is I think just over $100 billion versus their cash reserves, which are close to about $192 to $200 billion, right around that level. And they are one of the most cash-rich companies in the world, right? So with over $200 billion in cash reserves, it becomes really, really easy for the companies to make acquisitions, invest heavily in R&D, invest in the future, hire more people, and do a lot of things to grow their company. So now we're going to jump over to my TradingView platform to look at the stock price, look at how the pattern has been performing, and how the S&P 500 compares to Apple stock. And then we'll kind of map out some of those key support and resistance levels that we need to watch out for next week when they report their earnings on Thursday, July 30th. Alright guys, so here we are inside my TradingView platform. Again, if this is a platform you'd like to use for yourself to look at all the charts, create watch lists, create patterns and different alerts, the link is going to be down in the description below for you to get started with TradingView. So right now we're looking at Apple stock, ticker symbol AAPL, and as of Friday's close, they closed at $370.46, and they were down close to about $1 per share, and were down close to about 25 basis points. Now this right here is the daily chart, and you can see that Thursday was even a bigger sell-off when they were down close to 4.5%, and they dropped close to about $17 per share, and they opened at 388 or 387.99, and they hit a low of about $368.04, but then ended up closing at $371. Now moving forward, you can see that this right here is going to be the green candle. Even though the pattern sold off, or they were down from the previous day's close, this green candle essentially represents that the pattern opened lower and it closed much higher. So if I were to check this box, you can see how this candle will turn red, but I essentially like to keep this unchecked because it goes to show a little bit of buyer momentum and where the weakness or the strength is in terms of the price action. Again, I can really simply understand that Apple stock went down, but this green candle just represents that it opened lower and it closed at a much higher price. So that being said, if you were to kind of scroll back and look at Apple's history, this is nothing but an ascending pattern, and it's just been going up in value. It's just been increasing in price, and it's a very ascending pattern. And if you want your account to grow, you want to be invested in something like Apple that is consistently growing, making higher highs and increasing in value. So if you were to go back as far as May 2016, when Apple was trading at $91 per share, since then the stock price has essentially gone up over 300% in the last 4 years, which represents incredible growth. So now if you go ahead and compare that with the S&P 500, and if I were to bring out ticker symbol SPX, which is going to represent the S&P 500, this right here is where the S&P was trading back in February of 2016, and since then the S&P has actually gone up over 75%, whereas Apple, like I said earlier, has gone up over 300%. So it's definitely outperformed the S&P 500 in that period. If you were to kind of look at it more recently, going back as far as January of 2019, where S&P was right around this level, and since then it's gone up over 36%, and in the same time period Apple stock has again gone up even more, close to about 157%. And this right here is going to be the drop due to COVID-19, which is represented for both the Apple stock and the S&P 500, and how the S&P has rebounded and recovered close to 45 to 50%, and Apple stock has essentially bounced close to about 73 to 74%. So now going over some of those levels that we need to watch for Apple stock, and if I were to kind of remove S&P 500, and if you jump over to the 4-hour chart for Apple, again, this right here are going to be the earnings that are coming up next week, and they're going to be on July 30th. And like I said, the estimate is anywhere between $2 and $2.21 in EPS. And if you were to kind of scroll down on your TradingView platform, it kind of goes over what the actual versus the estimated EPS were in previous quarters, and it also gives you like a summary of the annual income statement, the balance sheet, the cash flow, and the quarterly income statement, balance sheet, and so on and so forth. The market cap sits at just over $1.6 trillion. The EPS is at $12.86, 12-month trailing. So the dividend yield for Apple stock is just about 89 basis points, so it's not a big dividend from Apple. The PE ratio sits at 29 0.11. That essentially means that currently the investors are willing to pay $29 for every $1 in future earnings for Apple as a company. Employees is about 137,000. On the week though, it is down. Apple stock is down close to about 3.85%. On the month, it's still up close to 2.89%. 3 months, it's up close to 31%. Year to date, it's up over 26%. In the last year, they're up over 78%, which we have gone over. So this right here is going to be the big drop that we were looking at from Thursday, when the pattern essentially sold off pretty significantly and found a low of about $356. So right here, and the next key support that I'm going to be personally watching is going to be right around that level, right? So that's essentially where the pattern found resistance here, going back as far as June 2020, and then again in the middle of June it got rejected at that level. You guys can see that it essentially hit that level and then had a minor pullback down 6%, had that rejection again until finally it broke out of that level and then retested and revalidated that previous resistance as an ongoing support. So that can potentially act as an ongoing support moving forward, which has very clearly acted as some type of resistance in the past. And the next resistance I'm going to personally be watching is going to be right here, where the stock is essentially trading right now, which is going to be at $372, because that's the high price from these three candles, right? So if I were to kind of zoom in on Apple's stock, you'll see that we hit a high for this candle was $371.62. The high for this candle was $371.88. The high for this candle was $371.40. And then if you were to kind of scroll back, you'll see that back from June 23rd, the high was $372.38. So, and then finally, when we broke out of this level, this right here acted as a really strong support. You guys can see right here, and this is from back on July 7th, right? So there was a lot of support right here, and the pattern would just not break below that level. So previous resistance, new support, and ongoing resistance, because now we are trading underneath the 372 level. So that's kind of like the range I will personally be watching for Apple stock. So moving forward, I wouldn't be surprised if Apple stock just continues to trade in between this range, with a resistance at $372 and a really good support at $356 until their earnings come out next week on Thursday. And once we find out how well Apple did in the third quarter of 2020, then we can make a better decision whether the stock price breaks out of this resistance or if it breaks below 356. If it breaks below $356 support, which we have recognized, then the next support I'm going to be watching is going to be right here, which is going to be very aligned with the 200 moving average, which is going to be the blue line, and then also a previous support going back as far as June 15th, right? So that's essentially the price where we have bounced off of. We touched that level and then pushed up close to 7.3%. So that price is going to be $329. And if we break out of $372 per share, then the next resistance is going to be $399 to $400 level, which is not only the all-time high for the stock, but it's a triple top for Apple stock, right? So you can go back as far as July 13th, we hit that level, got rejected once again on July 15th, once again on July 21st. So that is a very clear level of supply and a very clear level of resistance for Apple stock. I'll give you guys a quick recap on what levels we're watching for Apple stock going into next week when they report their earnings. The next resistance, or the near-term resistance I'm going to be watching, is $372. If we are able to break out of that level, then the next resistance is going to be at an all-time high at $399 to $400, which is going to be right here, and we have hit a triple top at that price point. And the next support I'm going to be watching is at $356, so right around this level. And if you were to break below that level, then the next support I'm going to be watching is at $329, which is where the 200 moving average is also going to kind of diverge into the price. And we have found support there as well in the past. As always, if you guys enjoyed this video, please make sure to drop a like. It really helps out with the channel. I will be putting out the second stock that we need to watch video later today, so in a few hours you should see that one too. There's too much information that I want to put into one single video, and I want to do a thorough analysis on one stock at a time. So this one's on Apple, the other one's going to be on another stock that we need to watch moving forward. And again, if we can get over 300 likes on this video, I will be putting out 3 more videos tomorrow, essentially going over 3 more stocks that we need to watch going into next week that are going to be reporting their earnings, and it's going to be really important for us to keep an eye out on them. As always, if you guys enjoyed this video, please make sure to drop a like. It really helps out with the channel. Also, subscribe and hit that notification bell so you don't miss out on any future market updates and videos related to investing and technical breakdowns. As always, happy investing, and I will see you guys in the next video.